Welcome to the Invested Dads Podcast, simplifying financial topics so that you can take action and make your financial situation better. Helping you to understand the current world of financial planning and investments, here are your hosts, Josh Robb and Austin Wilson.
All right. Hey. Welcome back to the Invested Dads Podcast, a podcast where we take you on a journey to better your financial future. Today, we are going to be talking about and unraveling the mystery around crypto ETFs, because that's a pretty hot topic these days.
Crypto ETFs, we have been getting that question a lot from clients.
All day, every day.
It's been making me want to doge the question.
Doge the question.
Yeah, you got it? Yeah.
I love it. So, yes, that is what we're going to talk about. So, a little background here.
Yes.
So, on October 18th,
yes,
the first exchange-traded fund that is directly-ish related to the world's largest cryptocurrency began trading in the U.S.
And the world's largest cryptocurrency is?
Bitcoin.
Bitcoin, okay.
I bit a coin. My dentist was really mad. It was the ProShares Bitcoin Futures ETF. Ticker, BITO. Not a great ticker. It's okay. Bito?
Yeah,
Bito coin?
If you're the first one, it's not like you're fighting for space here.
You would think BITC would be better.
Or crypto?
Or something.
Yeah.
So anyway, that is where we're at.
Okay. So let's unpack that. All right, let's look through. You said a lot of words in that sentence.
There were some words.
A lot of words. So ETF.
Yeah, okay. So for specifics, please listen to our episode. We'll link in the show notes where we actually compare ETFs and mutual funds.
Yep.
But at a very high level, an ETF, pooled investment vehicle, like a mutual fund, similar, that's traded in real time during market hours with transparent holdings, a lot like a stock.
Okay.
On an exchange.
Yep.
That's the exchange-traded part of the thing. These have gotten really popular over the last few years compared to mutual funds because they're liquid, super transparent, and often have affordable expense ratios and trading fees just like stocks.
Yep. So, summarize that. You could buy and sell like you do a stock. It trades all day long.
Oh, yeah.
So, at any point in the day...
Some great tickers.
Yes. You could say, I want to buy or sell this during the day. You get it, just like a stock. It's a pooled vehicle, meaning there could be multiple holdings, but you're buying one to get a bunch of things. So, that's always nice. And then the liquid and transparency mutual funds, they trade at the end of the day. You can't buy them throughout the day. You could place the order, but nothing happens till the end of the day. And you don't know what they hold except for once a quarter.
And
when they report things.
Because custody-wise, the mutual fund company has custody at that point. But here, you're trading it on an exchange.
And somebody else.
And someone else.
So supply and demand
plays
into that.
A lot like stocks.
Gotcha.
So that is ETF. The ETF piece there, number one.
Okay. Number two, you said an ETF tracks Bitcoin directly-ish. Now, I don't think you just were like adding that on.
No, I think I meant something by that. Yeah, good question.
What do you mean by ish?
Good question. It's very interesting. So BITO is the ETF we're talking about. It doesn't actually mirror the move of actual Bitcoin as many ETFs attempt to do with other underlying securities. So it offers exposure to Bitcoin by way of exposure to the futures contracts, presumably through the CME group in Chicago, because they handle almost all the futures contracts we have here in the States. So these future contracts, I'm not going to go in the weeds because that's complicated as well.
Futures are complicated.
But these future contracts are, in essence, contractual agreements to buy or sell an asset at a later date for an agreed-upon price. There are tons of these contracts available for commodities, for currencies, and things like that, and they're used for hedging.
Yeah. So, like farmer, for example,
lock in your prices.
They have a field of corn, and they say, "Okay, I can buy a futures contract for a price to protect me." To hedge is what you call it, but protect me from crazy price movements. So I could say, okay, I'm going to buy a contract to sell this corn at this price at a future date, and then I lock it in.
You're limiting your downside and upside. You're just locking in a price.
Okay, that's a future contract.
So that is a futures contract, and there are futures contracts for Bitcoin, and those are relatively new as well. But it essentially they were created to de-risk. You could hedge your Bitcoin. Like, it's kind of funny. Like, Bitcoin's extremely volatile, right?
Yeah.
So you could hedge your Bitcoin, and you could do it that way.
Yeah, why are you doing that?
I don't know.
Okay.
Yeah, part of the beauty of cryptocurrencies is the volatility.
Yes. And so if you're locking in a future price, that's really not showing you the day-to-day move. So if I'm holding this ETF, which trades daily, trades minute by minute while the market's opened, it's not a really perfect way to track this.
It's not perfect. So while the direction of these contracts and the asset tend to move in similar directions, and I nerded out, so I did some correlation matrices that we'll talk about later. But while they tend to move in a similar direction, they're not perfectly correlated, which means there are people buying and selling the contracts because you don't have to let the contract actually, need to be fulfilled.
Yep.
In fact, most people don't.
Right.
So there are people buying and selling these contracts that aren't actually buying and selling the underlying asset, which means that prices move in different magnitudes. Generally the same direction, but different magnitudes. So yeah, like I said, originally created for hedging, even hedging Bitcoin, but you're actually, this ETF is using the Bitcoin futures contracts as the movement that they're going to be tracking in terms of price.
Yeah. So it's really, from a high level, if you're buying into this fund, you're buying into the sentiment of people's opinion on Bitcoin, right?
Yeah.
You're in a sense saying, since it's a futures contract, if they're buying a price, they're probably expecting it to be
move one direction or another.
That direction,
Yeah.
And so you're almost just buying into future contract owners' opinion of where the Bitcoin is going to go, not that you're buying that you're hoping in the short term to capture the price movement.
Yeah, it's like speculating a speculative asset.
You're double speculating.
You're double speculating.
Squared it, huh?
Yeah, exactly.
Okay.
So Josh,
Perfectly clear.
that is two of the couple things to break down points.
Yes.
That's pretty deep stuff.
Yes.
I need a joke.
Dad joke.
I need a
Okay.
dad joke.
I got one here. And this really came about, because working from home during COVID, people started kind of businesses at home, trying to find things to do. So I started a home business.
Yeah?
Yeah. I build yachts in my house now.
Nice.
Yeah, I know. Sales are through the roof
Sales are through the roof.
because the yachts and the sails are tall.
Yachts don't typically have sails,
I don't
Josh.
know. It's a sailing yacht.
That's a sailboat.
I don't know anything about boats.
I mean, I like boats.
Yeah.
I think yachts are those. What's the Bezos got a
Probably a big one.
$300 billion.
They got to have a sail.
It's got a
somewhere.
motor on
They
it.
got to have a sail.
If I'm getting a sailboat, I'm totally just going straight pirate ship.
You just need a pirate ship. Yeah.
Like I'm not going to mess
Cannons and
around with.
everything.
I'm not going to
Cannons.
mess around with a catamaran.
No.
So yeah, that's the dad joke of the week.
Okay.
Every Thursday, coming at you. That's where we're at.
Okay. And so this ETF, now Bitcoin's been around for
A long
10
time.
years plus years probably, right? This is the first ETF being traded here in the U.S. Is that right?
Yeah. Keyword there.
Yes. US.
In the U.S.
Okay.
So yeah, Europe, Canada, those areas, they actually have already had for some time some access to direct Bitcoin investment ETFs, like where those exchange traded funds actually mirror the underlying asset of Bitcoin itself.
So other countries have direct investment vehicles.
And probably futures contract
Maybe,
or whatever as well,
Yeah.
but most
if you have direct access, sometimes
wow,
why?
exactly.
Why is the U.S. kind of on the trailing? Usually we're ahead of everything.
You would think, right? 3 letters, Josh.
Yes.
S,
Yep.
E,
All right.
get your mind out of the gutter.
Yep.
C,
C,
not the other one.
the SEC.
SEC.
Yeah.
So the Securities Exchange Commission really has been a little bit less than supportive about anything that could get crypto in the hands of more people.
Okay.
Now, there's a couple ways to view this. Depends on if you have your conspiracy theory hat on or not. Number one is some say, the SEC would say, that they're trying to protect people to keep them out of trouble from an unproven, extremely volatile asset, right? That's one view, and a lot of Main Street finance and government kind of are cool with that thinking. The cryptocurrency like bulls say that it is because, the SEC is in big banks' back pocket, and banks view crypto as a threat to the traditional financial system as we know it. So then that would threaten them if it got in the hands of more people. They're not usually a fan of that.
Yeah.
Depends on which side of the fence you're on. Those are just the two
My
views.
conspiracy theory
Oh, yeah.
is the SEC does not want to see the Big Ten do well, and so they are finding all different ways to
Exactly.
stop. Yeah.
Same people.
Yeah, I'm sure they're
It's-
the same organization, right?
it's the same
initials. Yeah,
people.
they're probably the same people.
So this has changed a bit lately, though, especially with the approval of BITO, the ETF we're talking about today. The SEC didn't formally endorse the ETF, but they didn't stand in its way.
So they didn't say, "Yeah, go for it."
Right.
They just said,
We're not going to...
"I'm not saying you can't."
Exactly.
Okay.
So what this did is it's really opened the doors for other futures-based products, derivative-based Bitcoin or cryptocurrency ETFs at this point.
So if the SEC, not this Southeastern Conference or anything like that, but the Securities Exchange Commission.
Yep.
They
Genslinger.
They're saying they're doing this because they want to try to keep people out of these assets
Keep them out of trouble.
Unproven, extremely volatile, and probably harder to understand.
Oh, yeah.
But yet, they're going to, in a sense, encourage, instead of direct investment, futures contracts, which are even more complex and harder to understand as a replacement for direct investment.
One would have thought that if you're going to approve a Bitcoin or cryptocurrency ETF, or not get in its way, I guess is another way to put it, you would have done that with the underlying asset itself instead of the futures contracts. But I'm wondering, so obviously the futures contracts, when there's more people interested in futures contracts, it's good for cryptocurrency in general. When there's more people interested in the derivative side of things as well, which is also good for the ETF. But I'm wondering if keeping people out of the ETF going and actually buying crypto is a way to keep a lid on some of the activity in the crypto market to keep it from going even crazier.
Volume trading.
Yeah. So, because it's all about supply and demand. So you're really increasing the supply and the demand for the derivatives, which is indirectly doing a bit for the underlying.
You don't have to directly hold the underlying asset. You
could, there's your other conspiracy theory. This is the SEC putting the kibosh on crypto prices.
That might be it.
Even though...
So they're not in the big banks' pockets. They're in the crypto, don't let it get too out of control people's pockets. Whoever those are people
Exactly. Anyone who holds it, probably.
They don't want it to go
the
crazy.
Bitcoin whales is what they call them.
The whales.
So, yes, exactly.
Right. Now, I have heard, and by heard, I mean you hold this in your Investopedia account, the Grayscale Bitcoin Trust.
Yes.
GBTC.
GBTC, yeah. It's
Explain that to me. I mean, that seems like you're directly investing.
Yeah.
What's going on there?
So, GBTC is actually formed as an investment trust.
Okay.
So it's kind of pseudo in the neighborhood of like a real estate investment trust. Not exactly, but similar. The investment does actually own Bitcoin. In fact, I think GBTC Grayscale is the largest holder of Bitcoin in the world. Other than, I think, the quote-unquote mystery founder of Bitcoin. Other than that, I think that they're the second largest. Okay. So the investment does hold Bitcoin versus the derivatives we've just been talking about, but it comes at a very hefty price tag. A 2% management fee.
Oof.
That is a lot.
That's a lot.
Now, when you're thinking like, an expensive mutual fund is like 1.
Yeah.
And usually a lot of these ETFs, 0.5 or 0, or there are 0 commission ETFs. So, pretty expensive. The other difference is that it may be able to trade at a premium or a discount to asset value, kind of like a closed-end fund would. Yep. And that's purely based on supply and demand. However, Grayscale is seeking to convert it to an ETF when authorities allow them to, which obviously that's what we've been talking about. They haven't allowed them to at this point. So that means that whatever premium or discount is present when that happens, that's going to vanish. And you will... So if GBTC is trading at a discount Bitcoin value and their ETF gets approved, so GBTC becomes an ETF is what would happen. Instant profit up to par or whatever. Or if it's trading at a premium, instant loss, regardless of the movement of Bitcoin at that point. So that is kind of where we're at there. So the real question, Josh, because I'm a nerdy numbers guy, is how has BITO performance been compared to actual Bitcoin? And because we're just talking about it compared to Grayscale.
All right.
So let's talk about it. Ultra limited sample size. I want to put the disclaimer here.
What do you mean? Short terms are not a good example of this?
So this just started trading in the middle of October. And here we are recording this on the 1st of November. Okay.
You got 2 weeks.
So you got a couple weeks. Almost a couple weeks. So over that time, 10/19 to 11/1, Bitcoin is down 5.24%.
Oh, rough.
Okay?
Volatile.
GBTC, the Grayscale Bitcoin Trust, is down 0.1%.
What's it doing?
That's
premium discount.
It's the I think it's a discount that is becoming less.
Okay, so it's working up.
Yeah,
okay.
And then BITO, the one we're talking about today, it's down 7.08%.
It's futures,
so it's down more than Bitcoin.
Okay,
and obviously a lot more than Grayscale. So because I have a fancy Bloomberg terminal and I like to do fun things,
yes,
I ran a correlation matrix for these 3 tickers.
Okay.
Looking at daily correlation over that same time period. GBTC, Grayscale, has a 0.926 correlation with Bitcoin over that time frame.
Okay.
Now, a reminder is that 1.0
is perfectly correlated.
Is perfectly correlated. They would move
they
in
do
lockstep.
Right together.
0.926 is
pretty
really
close.
high.
It's pretty close. Yeah.
BITO has a 0.995
Wow, that's almost
correlation with Bitcoin.
That's pretty much in line.
That's dang close.
Now, does that look at the movement
daily
and the size of the movement, not just directional?
It's exactly. Yes, exactly. Yeah. And it's reset every day. That's what that would be. So if Bitcoin is up 10% and you are up 9.95,
that's what that's
saying.
Gotcha.
Yep. And then I also ran it the other way. BITO has a 0.939 correlation with GBTC.
Okay.
So everything's really correlated.
Yes. So it is a directional movement. It's doing its job. So if someone buys this BITO as a way of saying, I don't want to own Bitcoin,
but I want exposure
I want exposure, it's at least directionally moving within the last 2 weeks.
Absolutely.
In the right way.
Absolutely.
Gotcha.
So Josh, where you come in, because you're my financial advisor, let's discuss your thoughts on crypto in general, whether via ETFs, trusts, individual holdings, talk about risk, taxes, regulation, just as an investor wants to look at the crypto space and putting together and thinking about their financial plan and their financial situation, what are some things to think about?
So the SEC does not consider Bitcoin or cryptocurrency in general to be any kind of investment at this point. They've not regulated. So in a sense, it's still considered a commodity or currency, which means it's income generating taxes.
Yeah. Well, you can have long-term capital gains on
I don't know
crypto?
on crypto right now. That's the question. And that's really where we're waiting to hear more direction from as more of these things come out. How are they going to be taxed? Is it going to be long-term, short-term capital gains? Is it going to be income tax? How are you going to tax these things? So with ETFs or, the investment trusts, those type of things, we're familiar with how those are taxed.
Yeah.
And so that's a little clearer, whereas holding currency and whether you offset some with loss, there's a lot of weird stuff going on there. In fact, the IRS now has on their tax forms a questionnaire that just says, did you trade currency in the last year?
And then they give you a new form
to fill this out and then take care of it. So that's an important part of the discussion. And as this grows and there's more options, you're going to see more and more look at how do taxes play into this. Along with that, like we've talked about with our cryptocurrencies, is your risk tolerance and your goals. How does this fit in there? Because we know
the
that
risky end.
we know that cryptocurrency in general is a more volatile asset than you see normally for stocks or bonds or those type of things. Holding the ETFs and trusts or those type of things appears to be just about as volatile. BITO was down 7% in the same time frame. Bitcoin was down 5.5% or so. Yeah. So it appears to be just as volatile, or you're going to experience about the same. So you got to factor that in. And then from a long-term standpoint with your goals, how does taking that additional risk, does it offer the return potential to justify that risk? So I don't think it clears anything up. It just adds a couple more pieces to the picture of how can I invest if I decide it's worthwhile.
So what do we think is going to happen as we get more clarity on regulation going forward? Because some of the cryptocurrency bulls think that more regulation is actually kind of bullish because it makes people feel more safe in the space, which attracts more people, which ultimately drives up prices. My personal opinion is that some level of that is a good thing for safety. However, I think the more regulation you have in the space, you're ultimately limiting your upside. And how much of upside in the space have we already, are you going to be able to get 10,000% returns on these things going forward?
Yep.
I think a lot of the easy money's been made.
Yep.
So
going back to the tax, I just looked it up real quick. Cryptocurrency is considered property and taxed the same way as property. So when you sell, trade, or dispose of cryptocurrency, that's when you realize the gain.
So you hodl.
Yep.
That's what they say. HODL.
Yep. You
never sell.
Never sell. Then you never have tax.
Exactly.
Yep. So just a reference point. But high level, like you said, there's so much. It's so new. New regulation actually could be a benefit. And I'm on that boat. I think bringing in some form of regulation in security, if you want to call it that. I mean, there's no guarantees in investing, but within account structures and those type of things, there's, insurance, the government puts kind of limits on fraud and those type of things that can help protect your assets. So, it can't hurt, in my opinion, for it to grow and become more mainstream.
But you know what you could do? Because crypto's moved very, very drastically either direction, right? If you're in a tax situation where you're in a high tax bracket or whatever, you can now, through either GBTC or I guess there's an Ethereum one or some more, or BITO, you can hold things like this in like a Roth.
Mm-hmm. Oh, yes, that's true.
So
now you can get crypto inside of a tax-free or tax-deferred growth.
Yep. So just something to think about.
Yes.
So, wow. That's a lot. That is an interesting question that is just on the TV right now. People are saying, hey, this is now trading. Is this good? Is this bad? Is it ugly? And the question is left to the individual investor because nothing we talk about is a recommendation here. We're not saying go buy BITO or GBTC or Bitcoin in general, but we are here to bring you the news.
Yes.
So, two things. Number one, it's still not too late. Even though this is going to come out into November, it's still not too late to enter our second half stock draft competition.
We go to the end of the year.
Number two, as always, check out our free gift to you. It's a brief list of 8 principles of timeless investing. These are overarching investment themes meant to keep you on track to meet your long-term goals. We don't talk about Bitcoin derivative ETFs one bit.
Nope.
So check it out. It's free on our website. Josh, how can people help us grow this podcast?
Yep, make sure you subscribe. That way you get our newest episode every Thursday. And leave a review on Apple Podcasts if that's where you listen. And email us any questions or topic ideas. If you heard of something else and said, hey, this is kind of weird, I want to understand more, shoot us an email at hello@theinvesteddads.com, and we'd love to respond to you. And then if you know somebody that was talking about future Bitcoin ETFs, then share this episode with them. And that would be really weird that just happened to be a conversation you came upon.
That's right.
If it did, awesome.
It could happen. All right. Well, until next Thursday, have a great week.
All right. Bye.
Bye.
Thank you for listening to the Invested Dads podcast. This episode has ended, but your journey towards a better financial future doesn't have to. Head over to theinvesteddads.com to access all the links and resources mentioned in today's show. If you enjoyed this episode and we had a positive impact on your life, leave us a review, click subscribe, and don't miss the next episode. Josh Robb and Austin Wilson work for Hicks & Zerker Capital Management. All opinions expressed by Josh, Austin, or any podcast guests are solely their own opinions and do not reflect the opinions of Hicks & Zerker Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hicks & Zerker Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment. Any investor who attempts to mimic the performance of an index would incur fees and expenses which would reduce returns. Securities investing involves risk, including the potential for loss of principal. There is no assurance that any investment plan or strategy will be successful.